Good afternoon, everyone, and welcome to this panel session on how Indonesia's exit landscape is shaping up. We have with us speakers from three top investors in the region. Harold Dong, partner at Indies Capital. He has been leading the private equity firm's tech and tech secondaries investments. Christian Sugiarto, Managing Director and CIO at the private equity firm CapSquare Asia Partners. And Gary Khoeng, partner at Vertex Ventures Southeast Asia and India, who focuses on investments in high-growth startups in Indonesia. So welcome and thank you for coming on. Before we start, for attendees, please feel free to post questions in the Q&A box, and we will try to have them answered by the end of the session. So, diving in, it's been a super exciting year in Indonesia. In 2021 marked just about a full cycle of a generation of startups, a good number of whom are moving on to the next phase through the public markets. At the same time, we see some startups raising funds in quicker succession, growing within shorter time frames, and there's been significant M&As among them. And there's also growing interest in Indonesia from global investors and corporate VCs. Now, as seasoned investors in Indonesia, what do these developments tell you? Are these sort of fundamental trends that we are seeing? Maybe we can start with Harold.
Sure. Thank you, Michelle. So, yeah, look, I think the the Indonesian market has certainly grown a lot over the last few years. It certainly started to mature. We saw 2021. I think really the emergence of a lot of unicorns, right? Before then, it was kind of only a handful a year becoming unicorns. But in 2021 in Southeast Asia as a whole, we saw actually I think over 20 just in one calendar year. And a lot of that is actually obviously in Indonesia. We've seen many examples such as Ajaib, Zendit, Credivo, and there are others kind of waiting in line as well. And I think just that weight of companies that are now very much at scale means that the chances for them to be able to look at the exit market and really look at IPO alternatives is really starting to shape up. Okay. And of course, there was with big fanfare, the first one for a long time, Bukalapak, which came out last year. And I think, as reported in Dale Street, GoTo is also currently in discussions in the market. So we're certainly seeing a lot of opportunities for companies to kind of think about whether or not to tap the public market. Even in light of what's happened, I think, in terms of volatility globally as well as locally, I think obviously it may lead some names to kind of pause, but I think the longer term fundamentals remain in place. That the IPO market and the exit market is really starting to take shape within the Southeast Asian context and more so in Indonesia.
Right. What about for you, Christian? What are you seeing in terms of developments in Indonesia?
I think it's an interesting development nowadays. As mentioned, in Indonesia, I think startup investment is entering a new stage of development as many are maturing and showing great track records. The recent development shows that the startup is getting more excited and competitive, but at the same time, you can see also that the investor, especially on the public side, is more and more educated. So it's a maturing of the Indonesian market, obviously.
Right. Also, I was wondering in terms of the market volatility, as Harold was saying earlier, to what extent, though, does the Russian invasion of Ukraine impact the market in Southeast Asia, in Indonesia? Are we sufficiently distanced from the conflict zone, and the fundamentals persist? Harold, again.
Sure. Look, I think to say that it doesn't have an impact at all, I think would be incorrect, right? The Indonesia, I think, stock market still relies on a lot of foreign demand and foreign volume, I think. And that's probably particularly so when you think about new economy opportunities, because they haven't been around for a long time. So you kind of need a bit of investor education. A lot of that I think will come from foreign capital. And of course, they will have kind of top-down views in terms of how risk-on should they be, what is the kind of global outlook given inflationary pressures, and now with the added dimension of an unknown, which really is the war, right? I think it will obviously have an impact, at least in the short term. And we are certainly seeing on the ground, I think, impacts in terms of overall valuation levels, market sentiment being very, very soft. But over the longer term, I think for most companies that are tech or tech-enabled and really digitally focused, I think it's really about the secular growth story of Indonesia, which very much remains intact. I think digital penetration is still at its early stages, and so it still has a long way to go. And so if you look at that from a longer term perspective, we're not suggesting companies need to go out in the next 3 to 6 months. In fact, they could probably take a pause given what's happened globally, but look to plan and look to get companies ready to get listed, more so in the course of the next 12, 24 months. We still think that that's a very it's a very positive sign for the overall market. And I think there's a lot of domestic support to see a lot of these companies that have really scaled up flourish and perhaps even list locally. And so we're seeing support even from the local exchange, obviously, giving the ability for companies like Bukalapak to, even though they're still loss-making, to be able to list locally.
Right. Before we go on to talk about the listings a little bit later, I wanted to go to Gary. Speaking of the secular growth story in Indonesia, Vertex is particularly heavy on tech investments. I mean, what are you seeing in terms of how the portfolio companies have been dealing with the market environment?
You're referring to this Russian invasion market environment?
As well as the sort of the volatility that we've been seeing over the past, even before the invasion.
I think especially with some of the IPOs that happened in the past, I think there's a general optimism in the momentum, especially in terms of expectations and kind of like the light at the end of the tunnel. So I feel like there was definitely in the past, I would say maybe a year or so, there's I guess what we would call a little bit of an inflation in terms of valuation expectations, even in the early stage, because people are kind of like being hopeful and all that. Now, obviously, the recent relatively underperformance, some might argue, of the recent IPOs and some other startups is kind of putting a dampening and maybe like a reality check on that, which is quite a shame. But I think there's another IPO coming out, Goto, right? And I think I would say almost everyone's all eyes on them to see how successful they're going to be. Because if they are going to be successful, then I think then the momentum might come back, especially in early stage fundraising and expectations from founders and startups. But if they kind of mirror what's been happening with some of the other startups that went IPO, then it could be like a concern overall in terms of investor confidence and expectation. Yeah.
Right. I mean, having said all that, though, we heard from Nick Nash of Asia Partners in his presentation this morning that in terms of IPOs by dollar value, Southeast Asia is already the 5th largest market in the world and could overtake Latin America in the coming decade. And Indonesia is, of course, expected to lead the charge, as it were, even listing Indonesian companies listing in the US. What do you make of this? Maybe Christian, you can take it first, and then we'll go to Gary.
Yeah, I think Indonesian and the stock exchange and today, if you compare with the rest of the world, probably is the best performing. one of the better performing, I would say. It went up quite a lot. In the 6 months, it went up around, let's say, 14% in terms of the LQ45 index. And then the GCI index is around 12%. So it brings some excitement into the equation. In terms of the IDX itself, is quite serious in encouraging the local startups. I can see that they probably help facilitate many digital-based startups by giving access to underwriters, supporting professionals, as well as even up to like IPO preparation training, which is interesting. So we see that IDX has become more open-minded, more flexible to accommodate the profitability requirements, and as well as the founders and the voting rights, as you can see in the previous IPOs. If you ask whether an Indonesian company going to, let's say, do dual listing or a listing in the US, that has to do with the size of the company. Honestly, I haven't seen many companies with that size that is ready for the US listing. But I would say that that trend maybe come back as soon as the so-called world stabilization is getting there, because we see that the Ukraine, we see that the COVID is subsiding, which is great, but the Ukraine will bring a certain color to the stock markets.
Right. Gary, what about you? In the sense that, how effective do you think IDX's efforts are vis-a-vis the US, for example, and even in terms of neighboring stock exchanges in Singapore, for example? How attractive would these be?
Yeah, I mean, I agree with what Christian said, I suppose. I think the dual listing thing may take a while. It has to be, as I agree, I mean, it has to be big enough to warrant the move there. But I don't know. I've been talking with some like equity researchers, some of my friends on the equity side. They did mention that, like in Indonesia, equity markets is not. I mean, obviously it's sizable here, but it's probably not as big as some of the other well-established markets. So I guess the question is, like, when we have, or we're expecting all these mega IPOs, who's going to be able to absorb them, and how successful they're going to be, like in terms of the the liquidity and basically the ability of people to participate. So I guess I'm not sure. I don't have an answer for that either. I guess some of the, I guess what I'm saying is that it could be, I guess the jury's still out. Now again, I feel like if the continued momentum and successful IPOs can happen, then sure. I mean, for sure. I mean, you can do a list, but even then, yeah. I mean, I don't know. Like, I feel like it's still. I'm in between. I'm not sure I can say that it's like the best thing in town, but at the same time, I suppose people need to be cautious just because of the current situation.
Right. Yeah. I mean, let's talk about the sort of non-IPO options in terms of exits. I think, as you mentioned earlier, with Bukalapak's performance, I suppose might have put a dampener. But Harold, coming to you, as sort of an investor in the secondaries and pre-IPO markets, for investors, how attractive are these these options coming up?
Yeah. So look, when we kind of started this, probably around 3 years ago now, I think our thesis was that as companies start to scale up and you get a lot more of them, and we were wrong. We were wrong on the downside. I think we predicted there would be 25 unicorns over the next 5-year cycle. There was over 20 just last year, and well over, I think, 40 now in Southeast Asia as a whole. So obviously the market has ramped up a lot quicker. It means you have a lot of companies of scale, and those companies of scale typically have taken quite a long time to gestate, to grow in the Southeast Asian context. And because of that, you ultimately will get the need for liquidity. Everybody has a different timeline. Everybody may need some liquidity for different needs. Funds have a particular fund timeline over time. And so I think we've been fortunate. I think there's been quite a lot of supply. We have a portfolio now of over 20 companies in Southeast Asia. And really that's from people who need that intermediate liquidity, we call it, which is really before the final exit or the final listing of the company, where there are opportunities to help, I think, founders, ESOP pools, early angel investors, seed or Series A type investors, who may need that liquidity in order to recycle capital or have different use of proceeds. And maybe even though the IPO may only be 3 or 4 years away, they just can't wait at that point in time because they've been invested for 6 or 7 years. So we think what's happening in the market today, there's two things happening. There's obviously a lot of scaled companies now. Okay, we've seen, as I said, the number of unicorns that have sprouted out, but there's also a bunch of companies waiting in line, within that 500 to 1 billion type valuation range, where there are going to be people that need that liquidity. And so I think the secondary market has become more and more active over time. Within Southeast Asia, we do see platforms starting to try and come in. We try and offer a institutional kind of solution, right? Working together with founders, working together with companies to try and provide this. And I think, given the pause in the market in terms of perhaps gunning immediately to do an IPO when market volatility and sentiment isn't at the best time, I think people will start looking at alternatives as well.
Right, because I think one of the questions I was going to ask is really how has the volatility and sort of overall uncertainty impacted the market on your end? And are you sort of holding back?
Yeah, so obviously we diligence each business by itself. We need to have conviction, I think, to add a name to our portfolio, but we have been very, very active, I think, in the last 6 months or so. What we're seeing, I think, in terms of public market prices and the sentiment there is probably going to have an effect on next fundraising rounds, particularly at the more mature phase. I think there's still a lot of dry powder in the early stages. So I think a lot of investors remain very, very aggressive, particularly in companies that are still relatively early in the life cycle. But as you mature and get towards the reality of comping yourself against the public markets, whether locally or globally, I think people will need to start looking at those international comps, and that the reality kind of bites at that point in time. And so we've seen already, I think, a little bit of softening in terms of how bullish people are. We know of transactions that have been repriced, for example, I would say in the last 3 or so months. And of course, at the end of the day, I think secondaries is going to get more active. And of course, there are associated discounts. And over time, I think when the market was very, very bullish, those discounts actually got squeezed. It narrowed over time. But I think people realize that there's obviously risk in selling those secondaries. They're not the same class or preference of shares. So we think things will moderate a little bit in terms of people's perception on perhaps price. And I think there will be a lot more activity within the secondary market. But at the same time, I say this, with a view that there are a lot of businesses that actually aren't overly impacted. And they still continue to trade well. They still continue to do very well because they're more infrastructure-like. They're more B2B, right? So they're less consumer-facing. And I think the interesting thing about the B2B digitization is a lot of them are a lot more profitable than the first wave of B2C companies that we have seen initially go public. So it'll be interesting to see how different business models start to think about exits and whether they end up listing locally or looking at SPAC options. To us, it's just optionality, and optionality is always good for an exit. For companies to decide on what is the best route of exit for them. Okay,
Right.
And it'll be interesting to see these new, more B2B digital infrastructure type businesses start to come out and gain scale and also look to list, because I think the economics of those businesses will be very different to some of the ones that are more consumer facing and cash burning that we've seen so far.
Right. So, Gary, coming to you, Vertex itself has exited stakes in a number of investments via secondaries. Just to understand, perhaps you could give us some color in terms of where the interest is coming from and what's driving it. And are we expecting more of such transactions to pick up in Southeast Asia?
Yeah, sure. I think, I think secondary sales during the growth stage, like, after early stage, but kind of like before pre-IPO kind of thing, happens quite a bit. What's driving them? I suppose it's just demand. Yeah. Again, like if it's a really high-profile company with good founders and they're able to, prove their track record, and there will be a lot of interest. So it could come from, I suppose, two different sources, I think. So first would be, let's say they're fundraising a subsequent round, right? Now, typically that is a easier way to kind of like sell your secondary, because then obviously the lead investor and potentially other new coming in investors are bullish about the company, right? So they obviously want to have more stake in the company without having to, I guess, argue with the founder in terms of dilution and all that. So secondary is an option to actually have access to additional shares of the company, right? And obviously the early stage investors, we're okay with that, because if the price is right, obviously we're more than happy to let go some of the shares and book some returns, right? The other thing would be sometimes, and it's probably rarer, is if somebody wants to come in and purchase secondary shares separately from an actual fundraising round. So that could potentially happen again. Like again, if it's like a really nice looking company and everybody talks about it, and there's really some guy who really wants to get in. Sure, they can talk, but it's very rare. It's really hard to come by. So again, it comes back to more during a fundraising round when there's a lot of interest. Then that could happen. Now again, obviously there could be a fundraising round whereby the interest is not really there. So most likely that's not going to happen, right? So you can't really just exit and do a trade sale during those situations. So it's very case by case, Michelle, and it really depends on the kind of like the sentiment, the quality of the company as well.
Right. So Harold was talking about how we are seeing sort of different business models emerge in Indonesia, sort of more B2B operations with different unit economics, and in that case, how they think about exits. I mean, just coming back to you, Gary, again about what you said about like a really nice looking company. What do you mean?
What do I mean by like a nice company?
Yeah, so like the B2B type models, or what are we seeing?
Oh no, I mean it could be a variety of different things. I mean I don't. Sure, I suppose B2B has this stigma of not being sexy compared to B2C, but I believe it's not necessarily so. I mean, SaaS-based companies or even SME solution-based companies are B2B by nature. So I feel like people are not that discriminatory versus one or the other. So what defines like a good company? I figure at least several factors. The first one, obviously, their traction, right? They need to be able to hit certain milestones and tractions within a time period that people are expecting. So obviously, they're beyond expectation, right? Their performance. So if they're doing very well, and people know, right? I mean, like if you're interested, if you're doing fundraising, you will provide a data room. People have access to your information. And then they can make an assessment. The other thing is obviously the founder quality, right? Usually founders are first-time founders, or it could be founders that had experience working in, for example, other types of unicorns, right? So when that happens, obviously a founder with experience and operational experience at other successful companies is viewed more positively, especially if it's like a successful company, right? Because then we're making the bet that this guy knows what he's doing. He's made some mistakes in the past, and he won't do it again, and he'll find a better way of doing things. The third thing would be kind of like the investor, the cap table structure. So obviously, a company with a lot of good names, good names. I would say like venture capital names that you hear in the news that that have a good reputation, right? Good reputation, good returns in other parts of the world. They come in, they invest in this company. So people are confident that obviously this company has managed to get the support of some of these reputable investors. So that is like a positive signaling effect. So I would say, I mean, right at the top of my head, primarily if you see whether this is a good company or not, you probably look into a lot more factors, but those are probably the top of mind factors. And if the stars align, and somebody wants to sell in the early stage, then I mean that's a good win for both sides.
Right. Coming to you, Christian. I mean, we saw a report about how certain major global investors have been sort of pulling back from sort of later stage and pre-IPO investments. How does that, in your view, impact the ecosystem in Indonesia, if at all?
Yeah. So it changed the ecosystem basically. Obviously, the competition is getting higher, and the valuation is somewhat in every environment, including in the PE. So that's for sure. So basically, for the local investors or investor that has boots on the ground, that have a more understanding and relationship that enable them to move faster than those let's say remotely managed investment in Indonesia. However, the recent development, the war, etc., and the tech, and some correction in the tech-driven valuation will bring a different angle on the valuation in the near future. For us, is we see that with the let's say maturing or later stage startups, we see that the opportunities are converging between the VC and the private equity. Many opportunities coming from the fact that the startups are entering in a growth stage, where more reasonable risk factors makes a PE more excited to enter this segment. As a matter of fact, lately, we look also at this so-called growth area of the startups, and also at the growth stage, and the PE can better measure the track records and the operations. And the more advanced startups may need PE expertise in helping them to prioritize the company, especially in the area of, let's say, operation best practice or finance. In our experience, when we invested in, let's say, Janji Jiwa or in Chambesto, we help them by strengthening the finance function and sharing our operation best practice. So in terms of exit, and as you asked, in terms of exit, we always see that liquidity in the world is still high, and people are under pressure to disperse. Yes, there is a bit concern about COVID because like a trade sale or strategic acquisition is more impacted because they couldn't travel. Now they can travel. With the Ukraine and the Russia tension, and it's very unfortunate. But in Indonesia, because I can maybe add a bit on the situation. So in Indonesia, because Indonesia is a commodity-driven country, right, and the commodity price has risen up quite significantly. So because of that, they provide like certain liquidity. Plus the fact that the real sector is quite strong. I see at least the recovery from COVID is actually better than my expectation in the past 2 years. So now, given that, we see that it's still, I think valuation will still be a little bit high and then maybe higher because of this. And sponsors, I mean, I'm talking just now about the strategic investors, but for sponsors, they are more a risk taker, and I think I can see that sponsors in general are very active in this region, to find good assets. On the IPO exits, remain interesting because yes, Indonesia can be seen that about 20% premium on top of the other emerging markets in terms of the consensus and the PE ratio. But if you compare Indonesia is now at around 14 times in the PE ratio, the consensus. But if you compare with the other ASEAN countries, Indonesian and the PE consensus is actually lower. And that's interesting because we can see that Malaysia, Singapore, and Philippines are higher than Indonesia, even though Indonesia is more active. So on the exit options as a private equity, there's no one strategy fits all, but the combination of this still helping us with providing let's say exit strategy for us.
Right. SPACs was mentioned as an option, but a lot has changed from a year ago. At one point we heard that global SPACs are looking to Southeast Asia for targets, and now perhaps US SPAC, the US SPAC market is going through its own challenges. But at the same time, the exchanges in the region are opening up to SPACs. So, what do we make of this? How do we see SPACs as an exit option? Maybe Harold, you can take this first.
Sure. I think I kind of mentioned this earlier in the sense that I think there's always a time and place for these different products, right? There are pros and cons. I think that everybody knows about. It's not the right answer for everyone. Some will prefer the local listing. Some have pretty globally recognized business models, and therefore, can go direct to a US listing, for example. It really depends, and the key for me is that whether you do, I think Singapore now has a SPAC market. Obviously, a US SPACs are looking for targets within the Southeast Asia context. It's really optionality. So the good thing for companies is that now you have a lot more options, right, in terms of your ability to exit. And certain things will fit certain companies a bit better than others. But I think it's still relatively active. I think just last week, Provident Capital Partners just announced a de-SPAC, right? We know there's still ongoing de-SPACs in relation to Credivo, Property Guru, some discussion around Carousel. Aren't they looking at that as an option? Together with the more traditional local listing, obviously GoTo is now on everybody's kind of notice board as to what is happening there, or going the route of C and going direct to the US. So that optionality, I think, is good for companies and businesses, and it's really up to shareholders and the management team to kind of take a look at the options that are on their table.
Right. Staying with you, Harold, whether to what extent do you think Indonesia will be impacted, if at all, if global investors such as Tiger Global, we've seen them sort of been really active in this region in the past 6 months alone, but there were also reports about investors such as them pulling back from sort of the later stage, pre-IPO stages of companies and focusing more upstream. What sort of impact do you think that will have?
Yeah, so I think we're already seeing some of that. As I said, valuation, I think is still pretty healthy. People are still very aggressively chasing deals at probably the earlier stages. I think as you get closer and closer towards that IPO, kind of pre-IPO stage, investors are now going to be a lot more cautious, right? Given what's happened, I think, with the recent IPOs. And so you will need to really think long and hard and comp appropriately against what else is in the market and what else is there globally. Because you will need, I think, the requisite support of global investors to price, particularly a lot of these new digital deals, right? Because the requisite knowledge base is not housed so much domestically, but I think more with foreign capital. And so I think, there's going to be a dampening effect for sure, I think. But as I said, we're not worried about it. For us, it's about looking at the long term. Companies don't have to go and rush out It's not like they have a gun to their head to do it in the next 3 months, whilst war is raging and inflationary pressures are, causing a volatility in the overall share market. I think if you have a good underlying business, that shouldn't change. It's all about execution, delivering growth, making sure you have the right business model in terms of not just growth, but also how you kind of use up capital, right? And as I said, I think it'll be very interesting when we start seeing, pretty profitable businesses that are, yes, a play on the digital growth within Southeast Asia, but perhaps they are not as consumer-facing, they're not earning as much money. In fact, some of them are profitable. So we think that'll be interesting for the market. It'll be interesting to see how the market absorbs those potential IPOs.
Right. I'm just wondering, given all that we have been talking about, the market volatility, the sort of different dynamics at place, whether fund structures need to change, or will there be sort of evolution that we see in terms of fund structures, given that, it's a function or related to exit timelines? Harold, maybe you can take this first.
Yeah, no, I think it's hard to try and beat down a tried and tested model of a fund structure with a fund life. I think, LPs sitting on the other side of the table will ask if you're trying to push the agenda too much, right? And if you go from a 10-year fund life to a 15-year fund life, of course, it's nice to have from a GP perspective, but I think just being realistic, you can't really push the market to move that much, right? It's always easier to have people invest when you are, pretty much market standard. What I think will shape up is perhaps a little bit more secondaries. People will be more active. As GPs head towards end of fund life, I think they need to think about liquidity measures. Perhaps even doing strip sales of funds. Perhaps doing a secondary on the overall fund. And I think some players in the market have already done that. Right, so I think that is really more of the answer, right? When things can't necessarily go out, in terms of timing the way you want it, and sometimes companies have to wait a little bit longer. I think it's true globally, by the way, that gestation in terms of companies before they go public has increased over time.
I mean, the other thing that we're seeing is also, not just secondaries, like you say, but continuation funds, and I think Vertex has been involved in that as well. I mean, Gary, from your point of view, in terms, how much more traction, or are we looking at continuation funds in terms of an exit option in a way?
I guess it could still be viable, I suppose, but it's probably not that. If you're saying it's going to be a norm or it's going to be easy, I'm not sure. I don't think it's going to be that easy given the situation. But yeah, I guess it is what it is. Yeah.
Right. I think last question, in a sense, for each, maybe we can start with Christian. In a sense, how, given all that we've said and all the developments, the whole ecosystem in Indonesia, just what can we look forward to in the coming few years, from your perspective as an investor?
Okay, so as I mentioned before, I see that this in the short term. I see that the commodity price will go up, probably already the height at the moment, and it will help the Indonesian economy in general to survive. As you know, the Indonesian balance of payments are mainly driven by the commodities, so this will help the Indonesian economy. As such, I would expect that probably inflation is a little bit under control. Yes, it's going to be there, but it will be offset by, let's say, the commodity and the price coming up. Indonesian rupiah will be considered to be stable, and you can see also from the past 6 months to 1 year is very stable. Maybe one of the more stable currency in the region. And then after that, we will see that the real sector is quite strong. The recovery from COVID is great. It's better than my expectations. So I would say that, and also from the stock market, I think it will be, in my humble opinion, I think it's still coming up because of a lot of interest coming from let's say Europe or North Asia to Southeast Asia. So that will be my vision.
Right. Yeah. So Harold, coming to you though, what do you think? Like we've seen more interest from foreign investors. As startups in Indonesia mature, what is Indies looking forward to?
Yeah, no, I think there will remain a lot of interest. I think what we saw last year was really a shift, because of what happened in China. I think a lot of these global investors then looked at where's the next kind of growth coming from. And obviously Indonesia is, the biggest economy within the Southeast Asia context. So there's a lot of investor interest. At the same, I agree with everything kind of Christian said about where the Indonesian market is heading. So from a longer term perspective, as I mentioned earlier, the secular growth is really there. Digital penetration will continue. It's the near term may be a little bit more difficult because of what's happening, obviously, in terms of volatility. But certainly the longer term view, I think, remains very positive from our perspective.
Great. Well, thank you, Harold, Christian, and Gary for taking the time to speak to us in this session. We do not have any questions from the audience, so I think we can wrap it up. So thank you again.
Thank you.
Okay.
And
Thank you.
enjoy the rest of the day.
Thank you very much.
you.
Thank you.